Before we start with the introduction, I will summarize the article. According to newspaper articles, this article is talk about the benefit and disadvantages of GST implement in Malaysia. An economist has praised the goods and service tax, which is GST, as a better alternative than the current sales and service tax, which is SST, in contributing to the government revenue. Studies show that GST offer almost double the tax revenue compared to the SST. It means that a tax system covering more sectors and industry is needed to prevent the linkage or tax evasion and increase the government revenue. However, the previous implementation of GST had disadvantages and was regressive, with the lower group income often bearing the brunt of the taxation. If the GST were to be reintroduced, the government must spend on the existing or providing a subsidy to this group. A 6% GST was introduced in 2050 but was abolished when Pakatan Harapan replaced it with the current SST system in 2018. Prime Minister Ismail Sabri Yaakob has not ruled out reinstating the consumption tax as an effective way to increase the national income and combat the inflation and rising the living costs. Then I will start the presentation with the introduction. Basically, for this part, I will explain briefly about what is GST and what is SST. For the first, I will explain about GST. What is GST? GST is called as Good and Service Tax. In Malaysia, GST was a multi-stage tax imposed on the supply chain process, which include the production and distribution stage. It will take the place of existing service tax and sales tax. On 25 October 2030, Prime Minister Datuk Seri Najib Razak announced the introduction of the Goods and Service Tax, which is GST, in a budget 2040 to replace the current sales and service tax. The rate of GST, which had a flat rate of 6% for most goods and service, with exemption for essential like exported goods and basic food item, taxed at 0%. The person who is registered under the Goods and Service Tax under the Act 2014 GST, known as the GST registered person, is required to charge GST with output tax on his taxable supplies of goods and service made to his customer. GST is charged on all taxable supplies of goods and service in Malaysia, except those goods and services that are implicitly accepted. GST also charged on the importation of the goods and service into Malaysia. We move to the next, which is the SST. What is SST? SST is called as Sales and Service Tax. It is a single tax applied either at the stage of the manufacturing or the level of the consumption of goods and service that paid by the consumer who are using the taxable service. Tax regulations are relatively flat in Malaysia compared to other neighbour countries, which can make the compliance challenge to maintain. This SST is implemented in 2018 to replace the GST. The rate of the SST has written with sales tax rate of 5% and 10% for a various goods and a service tax rate of 6%. But on March 2024, the service tax rate under SST has increased to 8% for all the taxable service except for a specific sector like food and beverage service, telecommunication service, parking service and the logistics service, which remain uncharged. SST work rely on a specific goods, whereas a service tax is imposed on the selected service like professional service, hospitality and a food service.
Assalamualaikum warahmatullahi wabarakatuh. I'm Zubair bin Karul Azri, and in this slot I'll be in charge of educating you the issues that arises when GST makes a comeback. Now on to our first issue. The introduction of GST will potentially increase the burden of the people. As Pakatan Harapan's representative put it, GST has the potential to increase the price of goods drastically. If added with supply chain problems and stagnant wages, the people will face terrible pressure. They also add that the current financial administration will cause a backlash from the people, since the 1MDB case gave it a bad image. On to the second issues. In the hand of financially irresponsible governments, GST can become a problem. The ease with which it collects money does not offer a strong incentive for the governments to practice fiscal responsibility. Since almost everyone is affected by the tax, there is more curiosity about how the money is used. Discontent will increase unless it is evident that the funds are being used for the general welfare of the public. Third and finally, the GST is a complicated tax to administer, and a considerable amount of preparation is necessary before it can be implemented smoothly. Although many developing countries have implemented a variation of the GST, not many have done it efficiently. Sri Lanka and India are examples of countries that are struggling with poorly conceived and implemented GST regimes in the world.
Moving on to the next slide, which is the literature review. It revolves around the implementations of the Goods and Services Tax (GST) and the Sales and Services Tax (SST) in Malaysia had significant and varied impacts on the country's economy, businesses and consumers. The GST introduced on April 1, 2015 with a rate of 6% was a broad-based consumption tax covering most goods and services with some exemptions. In contrast, the SST introduced on September 1, 2018 comprised a sales tax of 5 to 10% and service tax of 6% and applied to a narrower base of specific goods and services. The second one is the theoretical framework, which is the adoptions of GST and SST can be understood through the lens of tax theory, which emphasizes efficiency, equity and simplicity. The GST is a value-added tax (VAT) system designed to create a broad-based consumption-oriented revenue stream, while SST is a single-stage tax imposed on manufacturers and service providers. In this literature review, we are focusing on the revenue for government, which is the World Bank Lead Economies for Malaysia Apruvasani set studies shows that GST offered almost double the tax revenue compared to SST. The GST proved to be a more efficient and broader tax system, significantly increasing government revenue and providing a steady and predictable stream of income. In contrast, the SST generated less revenue, raising concern about reduced fiscal capacity and inefficiency in capturing a broad tax base. GST helped improve Malaysia's fiscal health by increasing tax collection efficiency, reducing the budget deficit, and providing the government with more resources for public spending and infrastructure development. However, according to Bank Negara Malaysia Annual Report 2013, the increase in wage due to the minimum wage policy has resulted in the company being exposed to higher cost pressures, especially when companies heavily rely on low-wage workers. As a rule of thumb, business entities always want to maximize profits. To mitigate these increases, most companies have shifted the burden to consumers through price increases. This will give impact on consumer, which is consumer bore the brunt of price increases with the GST, leading to dissatisfaction and protest. The impact was particularly felt by lower income households due to the broader tax base. Consumer experienced an increase in the cost of living as GST was applied to a wide range of goods and services, particularly affecting essential items and everyday expenditures. This prompted changes in consumer behavior, with some reducing discretionary spending or seeking cheaper alternatives to manage their household budget. With the reintroduction of SST, consumers experienced some relief as prices for some goods and services decreased. Although the benefits were mixed since SST still applied to a range of essential goods and services.
The first solution is to reintroduce GST in Malaysia. The Malaysian government should reintroduce the GST to boost national income and reduce its impact on businesses and consumers. A moderate starting rate of 4 until 6% could be used to minimize immediate effects and allow for future adjustment. To protect lower-income households, exemptions and zero ratings for necessities like food, healthcare and education are suggested. Regular reviews and stakeholders' input are crucial for improving the GST system and ensuring its objectives are met. Regular evaluations and stakeholder feedback are also essential for identifying improvement opportunities and ensuring the GST systems achieve its goals. Second solution that government take on GST issues is government can spread in-depth explanation related the GST system to the public. The government can educate the public about the GST through a public awareness campaign. This campaign should provide an extensive explanation of GST procedure, definitions and examples, as well as its use, advantage for individuals and businesses and related topics. This will help individuals become more aware for the GST that the government plans to enact. Revision of the current GST tax percentage rate is the third action that the government might take. A detailed examination of the present economic climate, consumer trends, corporate compliance capacities, and revenue requirements is required before the GST tax percentage rate is revised. A methodical procedure that takes into account economic factors including inflation, GDP growth rates, and changes in consumer spending is used to update Malaysia's GST tax rate. This makes sure that customers won't be unfairly taxed by the new rate and enables the economy to adapt to changes in the GST rate. The Malaysian government's revenue requirement and fiscal stability are the primary factors influencing the GST tax rate. These include determining the necessary funds for social programs, infrastructure, and public service, and the balancing the current budget deficit and public debt levels.
Hi, Assalamualaikum warahmatullahi taala wabarakatuh. Now we are going to talk about how the goods and service tax or GST has contributed to revenue generate. What we can look at the side of the GST, it tends to generate higher revenue for the governments due to its broad-based and efficient collection mechanism. It captures value addition at each stage of the supply chains, leading to the potentially higher compliance. GST also cover a wide range of the goods and the service under its umbrella, which mean that almost all of the economy activities are subject to the taxation. The Board of Taxation base ensure that the government collect revenue from the vast number of transactions, minimize the chance of the tax evasion. Therefore, for both revenue and income method has economic impact. Looking at GST, it aims to create a unified nation market by removing state-level tax and barrier. It's potentially boosting economic growth and improving ease of doing business. Example of the countries that using GST system are implemented by many countries, including Canada, Australia, New Zealand, and India. Each country has tailored GST to fit its specific economy and administrative context. For SST, it may generate less revenue as it collected only at the final point of sales and service delivery. The system has also less incentive of compliance since tax is collected only at the final sales. There is less incentive of businesses in earlier stage of supply chains to ensure compliance, unlike GST, where businesses benefit from input credit and therefore have a reason to ensure their supplier to comply with tax regulation. SST does not create such interconnected compliance incentive. Other than that, undeclared sales from retailer or service provider might be more inclined to underreport sales or conduct a transaction of the books or to evade tax, especially in case-based economy. This is hard to monitor and control compared to multi-tax system. Without the mechanism for input tax credit, SST can lead to cascading impact where tax are levied on previously tax input. This increase the final cost of the goods and service, distorting price and confusion decision. From both revenue and income method has economic impact. SST system does have a same unifying effect as it can maintain the state level difference tax policy, potentially leading to the tax fragmentation and efficiency. Example of a country that still using revenue income of the system SST system, the country like United States and Malaysia.
we move to the last part of the presentation. In the conclusion, both GST and SST significantly has their own benefits and drawbacks that can reflect the balancing act between the efficiency, simplicity, and the public acceptance in tax policy. The transition to SST from the GST was hailed for its simplicity and reduced the tax burdens on the consumer. However, it's imperative to note the GST border tax base had the potential for the higher revenue collection, which could be pivotal for the national development project. SST is arguably more business and consumer friendly, aligning well with Malaysia's aim to simplify tax process and reduce the cost of living. The transition was aimed at reducing the tax burden on the consumer and simplify tax compliance for a business. It's also driven by the social, economic and political factor, illustrating the importance of aligning tax system with a public sentiment and the practical enforcement capabilities. The Malaysia taxation strategy will need to continually adapt to economic condition and public need to ensure the sustainable revenue generation and the economic stability.
Thank you for your attention. That's all from us.